A couple of things. So, number one, welcome to May 16th. Number two, while we're here, there's a bunch of things that I want to go over. And on the education page, first and foremost, is the educational plan. Um, you know, One of the things that I've seen, and everybody's the same, so don't feel bad if you've made the mistakes, or don't feel bad that, like you're all alone and you can't get it or something like that. Everybody who day trades makes the same mistakes. Everybody who gets software makes the same mistakes. Everybody who, tries to day trade makes the same mistake. So there's a couple of things that I want to go through first. Then we'll just look at them, and we'll go through them together. We'll watch the market together. But, this is probably the most important thing that I can tell people. And anybody who's broken this first thing right here, it's true. I have a guy who tells me he's down money, and I said, well, you're not following any of the trading rules. He said, well, I don't know the rules. And I said, well, why are you trading money? He said, because I need to make some. And needing to make money is not is probably one of the most detrimental things to day trading on the planet because you try to make stuff happen and you can't make anything happen in this business. What we are as day traders, and you really have to understand this, is you're spectators. And you're waiting for, a very, very particular situation that has a very high probability, and then you can take a trade. So the first and foremost thing is don't trade real money while you're building your skills. And, I've done this for 20 years now, and it's the same for everybody. And you guys feel free to raise your hand if you've been guilty. Everybody's guilty, so if you don't raise your hand, you're one in a million. But, you're going to try to trade before you're really ready, and you're going to realize you're not really ready. So there's a few things that you guys have to perfect. You have to perfect which trades are you going to take. And it's not just, there's not 27 trades a day. And I think that's one of the things that most people don't understand is there's not 27 super high probability trades in a day. Not that it can happen, but usually there's 4 to 8 really, really, really good trades that don't have any trouble. And if you don't recognize the right trades, obviously you got to recognize the right trades first. Entry execution, we've pretty much eliminated any entry execution problems if you're using the market flow strategy. So, there's a couple of times where we'll take some chances and get in at some spots. But the rest of the time, the automation for entry execution handles that. And then really, really, really the most important portion, number one, you got to get the right trade. Number two, you got to get yourself in. And then number three, the management of the trade. I can't tell you how many times I've seen people sit in a trade and say, well, I thought it was going to go, so I just stayed in. And, again, you have to have some absolutes in trading. So, this is the gold market. And, you guys tell me, but it looks pretty easy to me. We have multiple time frame edge of fib support. Right? This is literally the reason that you bought the software, so you know where the turning points are going to be. Would you guys agree? That's a lot of blue Fibonacci support. And, again, one of the things that traders will do, if you're a counter trend trader, then, you're probably looking for some type of long trade over here on the retest and the failure. That would be my guess. For the counter trend traders. And again, counter trend trading is one of the more difficult things to do. And, again, it's about understanding your charts. And, Greg, you were telling me that you went short right here. And I said, well, it's not really the best trade. And the reason why is because of the rules. And you guys are going to hear me come back to the rules more times than you're going to care to like. I've been making a collection of, pictures, and killing a trend trade is probably the first and foremost problem that most traders have. And, again, I made this little video just a little while ago, which is shockingly obvious, but, the video is very simple. This is the plan, and in the real world, if you break the rules, you're going to lose. And you're not going to recognize that you broke the rules until afterwards, until you practice enough. And one of the things that lowers the probability of a next trend trade winning is hitting a bunch of red or blue lines. That's number one, right? So when you look at this chart and you say to yourself, do we have, I don't even know how many blue lines that is there, but that's probably 4 or 5 of them. That's a really, 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 really solid Fibonacci support area. And, then you start to couple that with some of the other indicators that we have, like divergence. And, again, really what I want to do is spend a lot of time today talking about some of, these are a lot of the pictures that I post all the time. And, I made little, basically just, I've made little bookmarks on these so that way you guys can see, and one of the nuances that I talk about 6,000 times a day is this. If you have at least 2 negative numbers, so, the negative numbers represent divergence for us, and divergence means one of two things. It's going to either make a retracement or it's going to make a reversal. And one of the things that you'll see happen more often than not is if you get 2 divergences at a spot. Let me just count them up for you, and you'll see how simple this is. But look, here's divergence number 1. Let me write on my charts here. Let me see how big this is. Bear with me here a second. And again, divergence number 1 at fibs. What does that mean? And again, this is one of those things, that Greg, you asked the question, how do I feel about your short trade? And, your short trade was right here. And it ended up getting back down towards the fib support again. But do you see, if you would have went short here, right? And again, as you go back and you watch every video on the planet, no divergence on the lows here, and triggers below fibs, and did not yet reach the end of fibs. And again, these are going to look very similar to you. Let me make another square here, but these are going to look very similar to you in the beginning. You're going to say, well, this one looks just like this one. Do you guys understand what I'm saying here? So, again, as you look at this chart, you can see we broke a blue fib, and we haven't yet reached the edge of fibs, and there's no divergence on the pivot, which means what? It means you're going to get one more trend trade. Do you understand that, Greg? Whether you take it or you don't take it, doesn't matter. This is all theory. Okay? Whether you get a fill, whether you don't get a fill, in any one given situation, if you wanted it to go 3 ticks higher and it didn't, whatever. I was telling somebody earlier today, you have to have contingency plans for, if you really wanted this to go 2 or 3 ticks higher, based on what? Based on the overwhelming strength to the upside that you had in the market? I mean, take a look at this. So here was your 14-2 chart. What in this look made you think you're going to get it much higher than this spot right here? There's really nothing. I mean, this is the strongest down look on the planet that we have. So, whether you took it or didn't take it or whatever else, it doesn't matter. And then, you can see the superimposing of that second trade looks pretty bad after all that support, doesn't it? Here's the thing, Jer. Take a look. I'll go down to the market flow version of the chart. Okay, this was the very moment you were waiting for this area up here. Is that what you're telling me? So what do the rules say? I've really got to expand this out because you're telling me that at the time of entry, that mid-band way up there is below my 14-2 reversal bar marker. Is that what you're trying to convince me of? Okay, so let's take a poll. Let's figure it out. Is this purple line above or below that white line? I'll blow it up even bigger. Well, you're the one who said you were waiting for that line and saying that the rules said wait for that line. So if you want to be specific, let's be specific. Barely. That's like your daughter being barely pregnant. It either is or it isn't. So, again, you have to have some type of situational awareness too. I mean, so let's not beat that up too bad. What else happened at the spot that you could have taken a trade? Right? So we're going to end up beating this one up a little bit, but do you see anything in your other indicators that might have convinced you that you should have put the trade on right there versus waiting for an area beyond the 14-2 reversal bar marker? A market flow short, what it looks like to me. And then, look, we hit support. We have divergence. There's no more short trades. If you do a short trade, it's lower probability. It's not that it won't work. I mean, they can work, of course, but again, it's your money. You have to make the decision on how much risk are you going to put your money at, and under what conditions are you going to stop taking trend trade shorts because they become lower probability. Yeah, so, again, I mean, look, situational awareness. When I go back to the 14-2 chart, this was the look before we went down. Right? There is no other way to say that that's the best look on God's green earth for us to go short trying to get down to this fib. I mean, that is what we live for right there. And again, look, we're going to go back down again more than most likely. And the reason why we're going to go down is the same reason we went down on the little chart. Watch. Everything's always the same. You get a trend trade short, right? So you get close to support, you get one more trend trade short. Okay, then you hit support. You get one more short, and then it comes down, and then it reverses. Well, again, you guys have to know. I mean, I can't know the rules for you. I wrote the rules, I put them all out here. What's one of the other rules that makes trades fail? So this is obviously from March, but if you have a trend trade look on the big chart, the 14-2 chart, you're probably going to lose your trade on the small chart. So if you look at your large chart, right now you're looking at your small chart and you're thinking, should I do a trend trade long? Right? That's your thought process on the small chart. Would you guys agree? But we don't look at the small chart first, do we? Because if you do, you miss the fact that you're running into this. What are the chances that this look right here is going to cause a bounce to the downside? What are the chances? Very good. Okay. So if you have a trend trade short look on the big chart, right? So what happens when you get that last trend trade look? I mean, I could draw the future out for you and tell you it's going to go down to here and stop out the lows, and then you're going to have divergence, and then it's going to go up. Okay, I could tell you that, but it doesn't do you any good until you know that and what's going to happen. Right? So look at the bottom. On every trend trade video that you guys have watched, what does it say when there's no divergence on the chart? You're probably going to get one more trend trade down here to retest the lows. Would you guys agree? I mean, look, I'm not going to regurgitate I've played the video enough, and you guys have seen the video enough for trend trades, right? I mean, I've done this video a gazillion times, and if you guys don't know this video better than you know your children, you should. It's, on the education page, it's the second one. So, and again, you guys, look, there's only one or two looks that are perfect for doing a trade. Everything else is bad. So you have to really think about, the things that you're going to be looking for. If you have a high probability trend trade look and no divergence on the lows before, look, it's written right in the plan, you probably are going to go down here and retest. Now, just because you retest the lows, not a guarantee it's going to hold. But what that means in the real world is, again, if you go and do this trend trade long right here, you have to understand what you're doing it against. What's the battle? Right? So we've had, again, as you work your way through the chart slowly, it makes sense. No divergence on the lows. You're going to get one more trend trade. I've already written it out. And then you have divergence at fibs, and then you actually make a low. Then you actually have two divergences at fibs, which is kind of a nuance to say that it's really, really going to hold, just in case you didn't believe it the first time. So look at the pattern. It's the same thing every single time, guys. The market breaks fibs, the triggers are below, you do one more trend trade, you hit the edge of fibs with divergence, no more trend trades. Even if it wins. Right? Because if you're willing to do all the low probability trend trades, then you're probably going to lose more than you win. And I don't know what you guys think, but that sucks. Losing sucks. Okay? That's a professional day trading term. Could we go higher? Sure. Could this be the low for the next 2 weeks? Sure. What do we want to see in order to know for sure that it's going to be okay? We want to get past this trend trade spot, right? Then we'll know for sure. But the patterns, the way they've worked out, and the way I've written them in the plan, and the way I've written them in the video say, if you don't have any divergence on the low and you get back to a trend trade short spot, eventually you're going to get down here and retest the lows again. It just works like that every single time. I don't know why, but it does. Do you guys believe me? Now, that's not a guarantee. I mean, we could conceivably have made the low and it's never going to come back, which is fine. Which means what? It means we'll get way beyond the trend trade short rules and then we'll know for sure. But until then, we have to say to ourselves, hey, look, we've got a trend trade short. There was no divergence prior. We're probably going to retest the lows. If we, again, now I'm thinking out into the future, if we retest the lows with divergence and stop out the lows, then maybe we really can make a low. At which point we'll probably run back up to resistance. It goes in, look, the small chart does it, Ali, and then the 14-2 chart does it, and then the larger chart does it, and then it's all different degrees of charts. So traditionally, the same looks happen on all the charts all the time. The patterns are always the same. It's strong move down, one more trend trade, divergence at fibs. If it retests, you go long, you make a bunch of money going long. Now, look where we're at. So I'll just small chart only. All right. So you guys look, agree or disagree. This is a conversation, not a lecture. If I have a probability of a trend trade on the big chart, right? And I end up with divergence, say on the little chart. I mean, ideally, if there was a fib here, my counter trend traders would be all perked up, ready to go. Maybe it'll get to the fib. But this is the pattern. It's always the pattern. It's the same pattern. Give me any market, anywhere. Look, doesn't matter. I'll pull up crude oil. If you don't have divergence on the lows, it'll probably go down one more time from the edges. If you get divergence on the lows, whatever it is, then you stop doing shorts until it breaks, and then it's okay again. I could pull up, let's go to a big chart. You ready? Here's 21-3 chart. If you hit fibs, right? So this was, what was this? The 13th, 14th. It's the same thing. If you hit fibs and one-to-ones and the triggers don't break through, no more short trades. Usually, and if you guys remember from this day, we were doing shorts right here. Now, We were looking for this area to bounce back down, retest. It didn't happen. That's okay. So look what happens. Just think in your mind, trend trade, trend trade, trend trade, trend trade, trend trade, trend trade. Trend trade on the big chart, trend trade on the little chart, trend trade. If you have a trend trade on the bigger chart, what's going to happen? Eventually, it's probably going to go up, right? I mean, I've got a gazillion pictures of this, but let's see if I can find the one that I made on this one. Let's see. Here's a picture I made the other day for us. So, look at it. This is the same chart. This is the perfect, strong trigger down look that makes us do short trades. This is the fib hit that makes us stop. This is the trend trade look that makes us stop doing trend trades. And then this is the strong triggers up of the pullback that makes us do trend trades on the next smaller chart. And then this is fibs and divergent stop out that makes it go down again. This was pre all of the going down. So look, here was what happened. So this was that spot. You know, and again, it's whether you use a 21-3 chart, whether you use a 42-6 chart, whether you use a 5-1 chart, the patterns are all the same. If you have a trend trade, it's probably going to go the other way. If you hit fibs with divergence and pivot stop outs, it'll probably go the other way. If you make a low without divergence, just like this right here, when it runs up, it'll probably push back down again to retest. And when it retests, that's the spot where maybe it goes the other way. So right now we're kind of in a mess here. So, you know, again, let's just look big picture, guys. You tell me what you see. Do you see the potential for a pivot stop out with divergence on crude oil? And granted, we have crude oil news today, but, you know, this is a bigger chart. Can you guys see it? I mean, granted, we double bottom that low right there, but if we stop it out by a tick or two, you start reading your fibs and triggers. You say, wow, look, two divergences at support. I think I heard old Novak talk about that once or twice. When I look at this support low, what do you see with the triggers? Where are the synthetic triggers? So, you know, again, look, longer term probability says to us what? Somewhere down here is going to hold, and then we're going to end up, you know, again, just based on location of these triggers, eventually we'll probably run all the way back up to here. I don't know. We have crude oil news today, so we'll see what happens. So again, it's fib and trigger line reading. And, you know, again, reading the patterns on when can I do one more trade? When is the same trade lower probability? Right? So, again, don't give up on a trend trade look just because it goes a little bit past it. Right? What's it going to take for this trend trade look to no longer be real? It's going to take a lot of work. And again, it can do it, right? I mean, I'm not saying, I mean, we didn't even get back to a trend trade long, so we didn't have to make any decisions. What's it going to take? I mean, look, this could be the low for the next, 2 years. I don't know. So it's all about reading the current charts. And, again, somebody had told me yesterday, they're like, I'm having a problem. All right, so let me bring this big chart back in. Yesterday, somebody said, I'm having a problem with gold going up. So look, this was the spot I marked it yesterday because I thought it was kind of funny. just from a slightly larger chart perspective. I drew this little circle on here. This was the spot right here. Can you guys see that circle? That was the spot where everybody was like, I'm trying to go long and I'm not getting any follow through. What's your overall thought of that? Well, but again, this is different chart perspectives. The 5-1 chart had a trend trade long, and the 14-2 had a support that held, and the trade actually won, but it never really followed through for a big winner. So I think MB was the one doing trades long. And it's not that the trades on the small charts weren't true. It's just, the overall, look, this is the rest of the bigger the chart, the more broad the view of the rest of the world. Right? I mean, obviously you don't want to go too big because we're only trying to make, $250, $200. So, again, this is why, when the volatility increases, I like adding on a little bit of a bigger chart because it gives me some, perspective. So, again, look, here's perspective from a big, big, big chart. Would you guys agree that this market broke a fib, pulled back to a trend trade short spot on a 21-3 chart? And now, based on the 21-3 chart, we probably have made a short-term bottom. What do you guys think on just reading your fibs and triggers here? So we have two divergences, which we've just talked about. We have a pivot stop out at fibs, and look at what the triggers are doing. Triggers are going up strong. So from a big chart perspective, the downtrend's over in gold. What do you guys think? Just from this chart and this chart only, two divergences at support, and the small triggers have crossed up really, really, really strong, and the synthetic larger triggers are above the fibs. Would you guys agree with that read? So, again, look, this is a bigger chart perspective. What's the norm when we have divergence at an area that's supposed to hold? What normally happens to the prior pivot? Do you guys remember that video? Usually we stop out the prior pivot. So, eventually gold's probably going to get up here to Fibonacci resistance. I know that sounds crazy, but support with divergence, the trigger lines say it's okay, and we'll probably go up to resistance. Now, couple that big, big, big chart with what do we have over here on our little chart? Again, it's all different time frame perspectives, but it's the same thing. We had divergence at a lot of fibs with no triggers breaking through. We had divergence number 2 at fibs with a lot of triggers breaking through. And again, we had some trend trade worries from the 14-2 chart, that they've pretty much alleviated now, right? So if you look at your large chart, we no longer really have a trend trade look, do we? I mean, that support has held. They have proven themselves by breaking above a trend trade short look. So like I said, we've probably made a serious, serious low. Now, they're going to pull back. They always do. I mean, they don't always pull back, but, going back to the larger chart, when fibs hold and the trigger lines roll up, what normally happens? Well, I can go back to this is a picture from our trading plan from 2004. Okay, you can use this same picture in 2018. If you have divergence, which now is a negative number, add fibs, and the triggers don't break, and the trigger lines cross over, when it pulls back into the trigger lines, guess what's going to happen? You go short. Now, granted, this is 14 years old, but the thought process is still the same. Do you guys understand this picture? So Fibonacci resistance with divergence, which for you guys is now a negative number. And then the trigger lines roll, and then we pull back into the trigger lines to go long. So, from a long-term perspective, somewhere in here would be a long trade. Look, if you were going to swing trade, that would be your swing trade. If I was like a stock option trader or something like that, as it pulls back into this spot, buy your puts or calls or whatever the heck is going up. And then when it gets up here, get out. It's always been the same, guys. So look, first thing you have to do is you have to look at your 14-2 chart. Here's the problem. If you spend a lot of time looking at this, how are you going to know what to do? This is like the last thought on the planet that you shouldn't even look at your market flow chart until you're ready to make a trade. And most people sit here and stare at this because there's a lot of pretty colors and dots and all kinds of stuff, and it feels like there's a lot more action and they can really see what's going on. But this is, if you focus on this chart, this is how people lose all their money, because you lose sight of the big picture. So forget about the market flow chart until you have a reason to go long. Does that make sense? You want to make sure that you have a reason to go long before you start looking at entry charts. So I want you to think about something. When you get divergence, what happens? Do you guys remember from the video? We stop out the prior pivot low, traditionally. Okay, so if we take out the prior pivot, we're going to probably change the trend back down to the downside. You have to really, really think. There's only going to be 3 or 4 trades a day that are going to be perfect, 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 perfect. And the rest of the time, you just sit here and wait until that happens. All right, John K., you were looking at 70.99 on crude oil for a short as it reached prior divergences, but we had 2 divergences at the bottom, so you got confused. Well, here's your chart. I made a short little video for you. There should be no confusion. a second. Look, this is your chart. You have what? So you wanted to go short right here. It's the same look as somebody who wanted to go long here earlier. Right? I made a video on this. I'll see if I upload it again. But, not to belabor the point, but it doesn't fit the rules for high probability trades. Let me see if I have them up here. So here's the, let me see. I'm just going to see if I can close some of these things down here. So this is the picture right here. And again, look, on your small charts, this is going to be the best looking trend trade you've ever seen in your life. Right? Because it's going to be the triggers are up and the background is green and you stab back to some fibs and you're going to think you're getting rich and then you end up losing your money. Same thing happened this morning. The triggers were up. The market pulled back to the fibs and then it kept going short. Why did it keep going short? Because once you get back below a divergent stop out, you usually are going to keep going the other way. So look at this box right here, John, that you wanted to go short at. You have literally the same thing happening over here. Yes, it's pretty. Yes, there's red fibs. Yes, the triggers are down, but again, it's the same thing up here. It's not that it won't work, right? It can work, but the rules say what? The rules say it's lower probability. So, again, look, how good of a trader are you that you can take low probability trades and win? Are you that good? Do you have so much experience that you can say, even though I've reached fibs, I know I can make some money anyway? Even though I stopped out the highs or lows and prior divergences, I'm good enough to make money anyway? I've seen so many examples that I know which one's a win. So, look, this is the look that increases your trend trade probability. How many things are there? There's one. This is like almost guaranteed money. And then there's like at least 12 things looks on your charts that lower the probability. So there's one thing that's almost guaranteed to win damn near every time, and then all the other times you're not. Which means what? 1 out of 12, which means what? You're going to be trading 7% of the time and waiting 93% of the time. And that's the thing that traders have a hard time with, is waiting. That's why we call it a 4-letter word. Nobody wants to sit and wait because it feels like you're not making any money. But I promise you, losing $100,000 because you want to keep busy is a lot less fun than making money. I'm going to take you through a couple of these pictures that I made. These are the same things that I talk about all the time, that I tell people. When they're like, why did my trade lose? I said, because of you were trading against one of these things. That was one of my shortcuts to kill a trend trade. Right? One of the other ones that I use all the time, which people do all the time, and it's almost, there's two ways to lose your money as quickly as possible. So this was somebody's picture that they posted. They're just jumping in because it's going down, and they think, oh my God, I'm gonna miss the move if I don't just jump in. If just jumping in because the market's going down one, then there wouldn't be 90+% losers, would there? Everybody could just jump in and make money. So the idea behind what we do is what? To use our resistance and to use the areas and to be patient enough to wait for it to come back up so we can reduce the risk, and then we can make a bunch of money. Every once in a while, jumping in is going to win. Every once in a while, trading against a divergence pivot stop out is going to win. Every once in a while, right? I mean, look, just think about probabilities and numbers. If you win 75% of your trades, you have to lose 1 out of every 4, right? I mean, you guys agree with the mathematics, right? So what you want to do is the trades that you want every trade to be perfect and every trade not to have one of these things against you, and every trade to have room to your targets so there's no trouble in your way. And then you get real high probability winners. I think Don O probably does it the best. He's one of our clients. You know, he's 82.7% winners or 83%, I'll round it up, over the course of, let's say, the last 2 years. And he does an average of 3 to 5 trades a day. And I made another picture. Check it out. I mean, these are all the pictures that I use on you guys during the day. So this was yesterday. Check it out. There was 100 ticks up and then at least 150 ticks down. And, you know, you guys tell me you want to make money, and I say that's cool, but you only need 25 ticks on one contract. So just think about numbers here for a second. You need 1 or 2 trades that makes you 13 ticks average. So, or 1 trade for 25 ticks or whatever. And you need to trade 4 contracts. So 25 ticks total on 4 contracts is $1,000 a day. There's 250 trading days in a year. So literally on a $20,000 account, if you trade a 4 lot and wait for perfect trades and take 25 ticks, you make $250,000 a year. So just look at this chart. On the strong push up, do you see 1 or 2 trend trade longs for 20 ticks? 1 or 2 trend trade shorts for 20 ticks? Do you guys see them? Where the boxes are? So it took, from 6 a.m. to 10. So it took 4 hours and you had at least 4 trades. Could you have made 25 ticks total during these moves? What do you think? Just waiting for everything to be going your way and to not have any trouble in your way. This is theory, John K. What I'm telling you is that you... Look, here's the problem, John K. You want to go short at the green box after you hit fibs and you're above a divergence line. And that is why you won't end up making 25 ticks. That's the point. Now watch. Let's just say, hypothetically, news comes out and the market breaks through 70.57. And everything is really going down strong, and you do 1 or 2 trend trade shorts on pullbacks. And then you make your money. Or divergence, stop out holds, and then you finally get way up here to 71.45, and everything's going up really, really strong, and you get one pullback to go long to 71.60. And you make your 25 ticks. Or you can try to squeeze some money out against support and divergence, pivot, stop outs, and one-to-ones in a messy area and end up losing your money. Now, look, it could win. So look at this one. This is yesterday. This is a 14-2 chart. Look at this one spot right here. Maybe even two of them. Granted, that's at the end of the day, but can you see how everything on the planet's going up and everything came from the right spot and everything's okay, and this one trade gives you your money for the day that you need? Would you agree with that? Forget about the second one. I'm talking about this one, where nothing is wrong. Everything's perfect. And you get 20 ticks. Look at this one. Here's your 14-2 chart. Everything is perfect. You've broken every fib. You haven't reached the fibs yet. Everything's perfect. There's your one trade for 25 ticks. Would you agree that that would have made you 25 ticks? Well, in a nutshell, all right, so let's nutshell it. In the trading plan, if you have any of these things true, so you really have to understand what the hell these things are, or else you're never going to make money. So let's look at the first one. If you hit the edge of more than one red line and you don't break through it, stop going long. So if you reach the edge of a bunch of red or blue lines, no more long trades. Do you guys understand that? Well, you say that. Greg, do you understand that? Donald, you don't understand that? So if the price runs into a bunch of red Fibonacci resistance, no more long trades. Donald, we're going to stay with this until you get it. Watch, I'll give you an example on gold this morning. Okay, look, here's an example. Why? Well, look, would you agree that this is a bunch of blue lines right here, Donald? And what happened to the market? Where did it go from those blue lines? So the trading plan says, very slowly, very easily, if you hit a bunch of red or blue lines, stop taking trend trades. These are the looks that lower the probability of the next trend trade winning, hitting a bunch of red or blue lines. Doesn't mean that eventually you won't break them, but for the moment, right? If you're driving your car, Donald, okay, and you're driving down the street, and you see a big barrier that has orange and red lines and stop signs and saying end of the road, do you keep driving? Or do you stop driving and go, maybe I should turn around and go the other way? So that's really what we're doing with these rules right here is we're saying this is the time, look, trend trades are great when you haven't reached the target. But once you've reached the target, which is your Fibonacci areas, you should stop taking trend trades. If you keep driving your car through that barrier, what happens? You end up dying, usually. If you go short after you hit a bunch of blue lines, you commit financial suicide. You're not going to die unless your wife kills you for doing stupid stuff, which I've seen. Right? I've seen a lot of spouses go, what the are you doing going short after you hit a bunch of blue lines? I've heard them say that out loud. Because there are couples that trade together that I know of, and they may or may not be in this room today, but there are certain conditions that are absolutely 100% you stop doing trend trades. So, Donald, the fact that you don't know the first one, then you have to, you have to know every one of these like the back of your hand, right? We talk about divergence, okay? So just look, and we had this conversation the other day in class. If you have a negative number of divergence at a red Fibonacci line, it means what? Read it out loud. What does it say? It means no more longs. Right? Is that one clear? I think it's clear. I mean, if you hit a red line and there's a negative number, stop freaking going long. It doesn't matter what causes it. Donald, you can watch the video on that later if you wish. There's a video on it. The only thing you need to know is if there's a negative number and you hit a red line, you're not going to take the next long trade and lose your money. Do you understand that? Not okay. It's a yes or no question. Do you understand that? Okay, good. Because here's what happens. People go, well, I went long anyway. Well, I'm like, why? I could go back to Dan's trade. Greg's trade this morning. Because he went short. And he said, what do you think about my trade? And here was the picture. He went short after we hit all these blue lines with divergence. And he wanted to know what I thought about his trade. And I said to him, and I think these are exact, I said, I think you don't like your money. All right, let me see. Well, there's two divergences that can happen, Don. So I'm going back to this picture for you here for a second, okay? On number 2, reaching multiple fibs gives stop the current trade. You think the wording next trade? Let me see. Once price reaches multiple time frame Fibonacci lines and Fibonacci lines in prior divergence, stop doing long trend trades. This lowers your chances of winning. Short trades are better. I'm trying to find where you say next trade. In the rules. Well, you're going to get a trend trade, Don, more than most likely. Or what's going to look, if you were in a vacuum and you didn't see these conditions on the bigger chart, you're going to get a trend trade look. You always get a trend trade look, but it ends up losing and you don't know why. It's because of this. Let me give you an example. Okay, so this is today. All right, let me clean up my mess here. You ready? I'll give you an example. So I'm talking about this spot right here. You see where my circle is? You guys see that? Excuse me. I'll put a square here. Maybe it'll be easier. Okay, so there's a green square there. Now, I'm going to go to my smaller chart and I'm going to find that green square. So here's what you're faced with. There's your green square. Would you agree that that's a damn fine look for a trend trade long? We're getting into lots of support and our trigger lines are going up and they're way up above all kinds of blue fibs and we're thinking, yay, we're going to win. This is the next trade that loses. So you're always going to get the amount. It's going to look, let me just write a note here. How's this? Just, I mean, there's no exact, but this is what normally will happen 75% of times. So look, 25% they're going to win. I don't know which 25%, so this is what you're going to end up with. Do you understand what I'm saying right here at the green box? You're going to get this look, and it's going to look like the best trend trade on the planet. And you're going to be looking for a long trade. And you're going to go long, and you're going to end up losing. And then you're going to, and look, this will be somewhere where you go long. And then eventually it ends up losing. And you're like, well, why did it go down? So, yes, you will get the next long trade. But because of the rules and because you took that long trade below a divergence pivot stop out, it's going to fail. More often than not. I mean, sometimes they win, but I don't know which times they're going to win. So we call it poison, stay away. Same way here, look. John wants to go short right here, above a divergence pivot stop out. It might win 25% of the time, but why? You don't have to take trades that might only win 25% of the time. If you just wait long enough, you're going to get one or two trades or three or four trades that have nothing in the way and they're just going to be so perfect, you're going to win 85% of the time. That's better. This page right here is the reason why new traders get frustrated, because they don't understand that if you hit multiple time frame fibs, stop going long, go short. They don't understand the difference in the looks. So look, divergence doesn't kill everything, right? I mean, nothing is perfect, of course, but traditionally, when you look at a chart, in winter, we had this conversation the other day, right? If you have divergence, it doesn't mean you can't go long. It means that you usually will get a pullback to get you to the next long. If you have divergence and it's at a red Fibonacci line, that's different. That's an absolute. It's red divergence, red resistance, and divergence go short when the trigger lines roll over. So, in this scenario, can you see where the trigger lines roll over and it pulls back to it? Well, that's okay. And you will continue to do that until you follow the rules. Look, I can go back to 20. Look, this was the plan in 2004. If you hit resistance and you have bearish divergence, which now is a negative number, sell a pullback to the trigger lines to go short. Is that an easy trading plan rule or what? Do you guys like that? I mean, that's 14 years old. That's why it looks antiquated. 14 years old. And this is the trading plan today. If you have divergence from Fibonacci resistance, don't freaking go long anymore. So what could you do if the trigger line's roll and it pulls back to it? Well, in 2004, that makes you a bunch of money to the short side. In 2018, do you see where your trend trade short would have made you a bunch of money? 25 ticks. Now, again, if you have divergence out in the middle of nowhere, it's not going to reverse the market all the way. Usually what it does is it just gets you back, for a little pivot stop out, and then you can get short. But, even looking at this picture, for counter trend traders, this is their trade because this is the 14-2 chart. Trend traders wait for the triggers to roll over. And then when the triggers roll over, they get one trend trade short on their little chart. So look, fibs with resistance, triggers roll over, you get one short that makes you at least 20 ticks. Divergence, pivot, stop out, wait for the triggers to roll over, you get a pullback, you get one short that makes you 25 ticks. That's it, 2 trades. And that took a long time. Well, that's overnight, so it doesn't really matter. But still, the rules are the rules are the rules. I mean, this is the third one that will just ruin your day, which I think we've beat this one up enough today, haven't we? If you get a prior divergence high and it barely stops it out and gets back below it, you're going to lose more often than not. If you do it anyway and you lose, and then you post your picture and go, why did I lose? Then I have to tell you again that, hey, look, you did it again. You have to know what not to do. This is, one of the biggest ones. It's the easiest to see on the planet. And people still do it anyway. They go, well, the big chart set up. So I took another long trade after 2 divergences at resistance. But if you remember what we said about divergence at resistance, what happens? No more longs. Well, if you have 3 divergences at resistance, or 1, 2, 3, 4, 5 divergences at resistance, what do you think? Just watch the rolling triggers, that's it. You wait for the trigger lines to roll over, and then you go short. Because you don't know for sure, right? So look, this is from the video, 14-2 chart reading, and you can use this. Look, all the way down, if you don't have divergence or fibs, you go short, you go short, you go short, and then eventually you're going to hit a fib, and the triggers are going to roll over. And then you can go long. But I mean, look, this took time-wise from 4 a.m. until probably 2 or 3 in the afternoon Took 12 hours before it rolled over to go long. So you don't want to go long when it looks like this. You want to go short, go short, go short. Do 3 shorts and you made all your money. If you have divergence on all of your charts, you will lose your trend trade more often than not. Do you guys understand that? Now, if it breaks through the resistance and breaks through the divergence, then you can keep going. So there's always, there's never such thing as an absolute. It's at this moment in time, no more short trades. If it breaks through here and this turns blue, then sure, you can do more long trades. So think about it. If you hit resistance and you have divergence, don't do any more long trades. Pretty simple. All right, so you guys know we're going to have crude oil news in 15 minutes, right? So crude's going to end up probably not doing a whole lot until, that's worthwhile of anything until after crude oil news. Once crude news happens, then everything should be all right. Don, let me read what you wrote here. Once again, I think you mean when I hit triple divergence, the current trend is a low probability of going higher. The verbiage, low chance of the next trend trade winning, is confusing. So rewrite the plan as you see fit, Don. You have the Word document in your folder on your desktop. If you don't like the verbiage, you can change it. So you're saying the same thing. When you have triple divergence, the current trend has a low probability of continuing. So that means, in theory, that the next trend trade is going to probably lose. I mean, you do realize that you're free to take the Word document and reword it as you see fit. You don't have to have my version of it. You can rewrite your own so it makes sense to you. The theory is that the market will probably go down if you have divergence at resistance, if the trigger lines roll over. So I think I know you're an engineer, so I think you're saying the same thing. You just want to say it differently. That the current uptrend has a low probability of continuing, which therefore the next trend trade is going to lose. Is that right, Don? You can word it how you guys do realize that I put the plan, the Word document version of the plan, it's in the folder on your desktop. So if you guys don't like a picture, you don't like some of the verbiage, or you guys are, look, this is a starting point for you. You have to make it so you understand it. You guys do know you have this Word document, right, in your desktop, on the folder on your desktop. So, again, look, you have to understand, I've got 20 years of looking at this crazy thing. I know what I mean, so if you don't know what I mean, you have to ask the question. And if you don't like the way something's worded, reword it so it makes sense to you. The concepts are the same. I just want to make sure that you're comfortable. It's 2A. Multiple divergences have been reached by price. The fact is that triple or multiple fibs, there's a good chance of the next short trade will have high probability. Well, but here's the problem, Don. You've just crossed over into the other trade that we do, which is trades from the edges. So you've crossed lanes. So what I'm trying to do in this section is tell you when trend trades are going to suck and you're going to lose or lower probability. Now, you can extrapolate from that if you're at multiple time frame fibs with triple divergences that you can go the other way. But then you're talking about the other trade. You're no longer talking about trend trades, you're talking about counter trend trades. Well, but there is no current trade, Don. See, you have to get this straight in your head. We're talking about trend trades. The next trend trade, listen to what I'm saying slowly. Just listen. Don't think about what you're going to type or what you're going to say. If you hit one of these looks, the next trend trade that the market will tempt you with will lose. It is the next trade. The next trade, we just talked about this. We went through an example of it. This is the next trade that's not going to win. So this is the condition that caused you to say, hey, the next trade's not going to win, and then this is the next trade that didn't win. Does that make sense? It's not this trade because there is no this trade up here. You don't have a this trade. It's the next trend trade's going to lose. You're under the impression that you're always going to be in a trade, which is not true. 90% of the time, you're just going to be reading the fibs and triggers, trying to figure out when you can do a trade. So, Don, I want to make sure this makes sense to you. This is not the current trade. This is the next trade that's going to lose because of the conditions. MB, you've only had one trade that fit your rules today? Yeah, I just went in there and talked to Melinda. She says she hasn't even done one trade today yet. So, which is good. There hadn't been one. She said she was looking for a trend trade on gold, but it never happened. So, so do you understand? We're not talking about counter trend trades here, Don, but you did touch on something that I think is, that I even wrote on this one picture. The same reason that you would stop doing trend trades is probably the reason you would start doing counter trend trades. And I did put that on here. But, and I say this with a big but, most new users of our software are not good enough to do both trend trades and counter trend trades. So what I think is more important for most people, and you guys are most people, so you tell me if I'm right or wrong, the most important thing to you in the beginning is what? Don't lose money and give yourself an 80% chance of making money. That's what I think is most important for the new clients. What look is so good and so no trouble against it that you're going to make 20 or 25 ticks in a day? And then once you start making money with super high probability trades, if you decide, hey, I want to start adding in or experimenting with medium probability trades or low probability trades or counter trend trades, then you can do that. But I think the most number one rule in trading, I'm just going to show it to you again. The number one rule in trading is do not trade until you know why you're trading and you can be 100% certain you're going to win. This is the one that most people break right away because, and I've got a long list over 20 years of people who they start trading before they know what the hell they're even talking about. Because they think that somehow magically that because they've got software that calls turning points, they possess some kind of magical day trading skills and some type of experience that they don't actually have yet. And, look, if you lose $1,000 or $2,000 because you think you're ready to trade and then you realize you're not, stop. Right? So you're going to get through, as you work your way through the plan, you're going to work on your skills to become successful. You're going to practice your trade recognition, more importantly, when not to trade, because most of the day is spent when not to trade. Then you're going to practice getting in, then you're going to practice managing the trade, and you're going to do it so many times on the simulator that the only possible outcome is that if you follow the same thing in real life, you're going to make money. So if you follow the rules and you're doing the right trades and you're not trading into trouble and you execute properly and you exit the trades, manage the trades properly, and you've done hundreds of simulations of the right rules. Somebody told me the other day, they're like, I've done 100 simulated trades. Am I ready to trade? I said, hell no. There's no way on God's green earth you would ever even ask that question if you were ready to trade. People ask me that all the time, am I ready to trade? And the answer is no. When you can guarantee yourself that you're going to make money and that the rules work and that you can execute them properly, that's when you're ready to take a stab at it. And again, once you have the switch to live money, again, look, there's 3 phases, guys. The first phase is you can go back in history and look at it and you can see it perfectly, right? Everybody's got perfect 20/20 hindsight and you can always see the trades after they happen. Would you guys agree with that? And then you get on simulator and you screw it up and then you post in pictures and we start working on things. And then eventually you say, hey, all right, I've got the rules and now I can finally simulate and make some money. And you're a simulator millionaire. And then you switch to live money and you screw the whole thing up and you lose every trade you put on. Because for some reason, the pressure of live money, even if it's only $100, totally makes you forget all the rules and everything that you've practiced. Everybody does the same thing, so don't feel bad. It just means that you haven't yet done enough practice of the rules to be so confident that when you take a loss, you can look at it and say, hey, I still followed the rules perfectly. It's okay. And look, you're going to think you're ready, and that's fine. So, most people, I have one guy who's currently in the midst of losing $105,000 in his first 5 months. And he doesn't follow one rule properly, and he doesn't do anything right, and he's still down $100,000. And I'm like, stop trading. He's like, I got to keep trading or I'm never going to get it back. I said, well, if you keep trading and doing it wrong, you're just going to lose it all. He just won't stop. And and again, he knows the rules and he chooses to not follow the rules. And, look, you're going to lose some money when the first time you go live, probably. Okay, so just get your mind wrapped around it. You're going to lose 1,000 or 2,000 bucks, and then you're going to say, okay, let me go back to simulator. If you lose 100 grand before you go back to simulator, you've probably done it wrong. You know, there's very, very, very few days that have perfect trades with nothing against them that end up actually losing as losing days. It almost doesn't happen. So, again, the waiting for things to happen. What do you guys see up here? Do you see two divergences at the top? Double divergence, pivot, stop out at an area. That means that the next trend trade's probably not going to win. It's just the way it is. I don't know why. The only thing I can do is point it out. Look, I've got a picture that I use all the time, and I say it every day. And if you have two divergences at the same area, usually it goes the other way. So, again, look, if you have two divergences at the same area, it usually doesn't give you a trend trade that wins. It's just the way it goes. All right, let me take a look at some of your trades here real quick. Siva, short with two divergences at the top, and then you sold, and then you made 30 ticks, and then you sold resistance, and you got out at support, and you made 35 ticks. Okay. Again, guys, look, Siva's had software for 12 years now. I guess last week, Siva. Don't worry about what Siva does. I think Crude News is out. I just saw it jump on my other screen. Newt, let's take a look. Stop out plus divergence, no trade. Look, and it's not that you can't have a trade, it's just it's lower probability. So you guys just have to say to yourself, what is the best trade on the planet? What's the best trade you can possibly do? All right, so Greg, this is yours. You went short. Again, you tell me. I mean, number one, I wouldn't trade right before news because it goes crazy. But you tell me. Look, I'm just going to use this one chart and this one chart only, okay? Let's forget about the context of every other chart that's out there. I'm going to give you guys a video to watch. Right. So forget about that for a minute, John K. So yes, there are some things on the big chart that will cause you to not do trades on the little chart, but just reading the little chart in a vacuum. Okay, Greg? What do you see? The only thing that you can really do is read your fibs and your triggers and your divergences. So what do you see? is a red line of Fibonacci resistance with divergence with the synthetic triggers way down below. Is that an area to trade or not? What do you think? Now, you may choose not to do it because of a large chart, something or another. Double divergence says no more long. So if you're at resistance and the triggers are going down and you can't go long, what could you do? It would support the short. I agree with that 100%. Now, it's a little before news. And again, this is void of the large chart and the news that was about to come out. As long as the large chart wasn't against this, then yes, 100 out of 100 times it's a short trade. Forget the news, forget the large chart, just small chart all by itself, it's a trend trade short. Yes. I don't know. I don't know. That's your job, is to know that, John Kay. I always say that, again, this is the spot where he was thinking about going short. I say it's lower probability because of the divergence pivot stop out. It didn't mean it didn't go down a little bit, but then look what happened eventually. This is a support that's probably going to hold. Look at what you have, guys. You have multiple time frame blue lines, yes? You have small triggers that are going up and above the synthetic triggers, right? Yes. What do you guys think? Or you're in a trade probably, aren't you? I just heard Melinda say she's flat plus 20, which I expected. That's my wife, by the way. What do you guys think? Does that fit what we're looking for? 2 Fibonacci supports, trigger lines going up super freaking strong. We haven't yet made it to the trouble spot, which you can see is clearly right there. All you need is 20 ticks, guys. So look, let's take it down to the small chart. This is the spot on the small chart. So Fibonacci supports. Do you see anything down here that's helpful? Yeah, well, that's where she got out, John. Now, this is the large chart spot where we said we're going to run into trouble. Remember? Look at how trouble works. Let me squeeze it together for you. Remember, this is the divergence and resistance right here. Same reason we didn't want to go long over here earlier, right? We'll wait for this to really break out, and we'll wait for things to really change. And look, they could keep going up. Maybe. But do you see how if you get back down here, you're going to be in more trouble? This is the same thing as this morning. If you trade below this area right here, long trades aren't going to be good anymore. Right? Just like this morning. Now, remember what we talked about earlier? If it trades up so high up here, that your pullback won't get below or have any trouble, then you'll be able to do more long trades. Right? Yeah, this is earlier. So right now you're in a waiting spot. Is it going to get back below? If it does, it's going to be trouble. If it really goes up so high that we won't get back below this, then we'll have easier long trades. Does that make sense? I don't know what's going to happen. There was one easy long trade. It was right here, where we hadn't reached the fibs, we hadn't had trouble, the trigger lines were up really, really strong, and we had one easy trade in a mess. I mean, this is pretty messy. What about 19? Well, I mean, look at what the triggers are doing. We may break out, John. 17. If you, Jesus, man, all right. If you get below this divergence line, John, are you going to have a high probability long or not? Okay, so when you say, what about 17, what does that mean? 17 means you'll probably lose money if you try to go long. How are you going to guarantee that you don't have any trouble? That's the whole point of trading. Look, we could go up. I don't know whether we're going to go up or down. I want it to go up. Listen to what I'm saying. I want it to go up so far that this area is no longer a thought. That's when I know we're going to be free and clear. You understand that? When it goes up so far that this won't be my trouble spot anymore. Otherwise, if we get back below it, it's still trouble. I mean, this is a good live lesson, don't you think, right here? Now, I'm not saying that it won't win 25% of the time. They will. I just don't know which 25% it is. If I did, that would be cool, but I don't. I'm not magical. So watch. We're probably going to pull back to here, right? Because that's what they do. You see how we're below the divergence line again, John? And if you think about long trades, still, I mean, look, could it still hold right here and go up? Sure, it could. But again, it's low probability. I don't want low probability. I don't need low probability. Low probability doesn't pay the bills. High probability pays the bills. Even if you have to sit on your ass for 3 hours or 4 hours and do no trades whatsoever, high probability pays the bills, low probability sends you back to a job. Which one do you want? See how we got back below here? Look, we might go up. And look, this is where I'll go to my larger chart maybe and see if I can pick up some kind of read. So let me go to my larger chart and see what the larger chart says. Let me just clean all this crap up. There's divergence pivot stop out at the bottom. There's a divergence pivot stop out at the top. Does this chart help my long endeavors or not? The triggers are going up strong, yes. Remember, this is the one down here at the bottom that we talked about this morning that was probably going to hold because why? Where the triggers were. And it did. And this was where the easy trend trade long happened from on the other chart. So that was helping. All right. Jerry, you ready? I'm going to call you Mr. Can of Worms. Okay, here we go. I made some other pictures. You ready? These are some additional pictures that I used during the room. So one of the things that I like to look at when I look at this 21-3 chart, which is true on all charts, but number one, if there's no divergence there, I don't worry about it as much, but I still pay attention to it. But, Fibonacci and trigger line reading, which is literally one of the most important things on God's green earth you can do, which I'll give you guys this link. If you haven't watched this video or you've never watched it or haven't watched it in a while, go watch it again. It's old, it's years old, but I mean, it's probably the best Fibonacci and trigger line reading video I've ever done. And once you get the concepts in this, reading your charts are really easy. But again, look at the double divergence and the pivot stop out and where the large triggers were. This is like guaranteed to go down almost. Right? I mean, that's like a guaranteed I'm going short. And look, this has the same thought over here, but look at the trigger lines. This is one up here that I would use to aggressively or assertively go short with. This one, I'm not aggressively going long with because of the look of the triggers at the spot where I'm watching. It may still go back up, but I'm going to wait for it to go back up versus try to jump in front of that. Do you see the difference in the trigger line reading at these two areas? One at the top, one at the bottom. One of them is very, the large triggers are way below and very weak and double divergence. And then one of them is barreling down into the spot. Do you guys want a guaranteed way to have $1 million in your trading account at the end of the year? Start with $3 million and trade against the trend. And you'll have $1 million in your account at the end of the year, guaranteed. You can't fight super strong triggers. We want to trade with super strong trigger lines. That's the whole point of our whole everything we do. So when I see something like this, where I have this little pivot stop out, I ask myself, where are the triggers? Are they barreling up into that area and going to break through for sure? Yeah, I'm not feeling it yet. Now, this is the 14-2 chart, which is the one that we always use. So again, look, you can see the pivot stop out here. So, look, I'll call this my line in the sand. If I get above this, we could probably do trend trade longs pretty easy. As long as I'm below this and damn sure below resistance, I'm not going long. Just it's low probability long trades and you're going to end up losing. Trading long into a red line is one of the worst ideas on the planet. That's the whole point of you guys buying the software, is so you know where the red and blue lines are. So, as exciting as it was, there was one good high probability trade. It made 20 ticks, and then now everything is low probability until further notice. Eventually, it'll work itself out. And again, I can't stress this one enough. Let me finish this thought, okay? Do you guys understand these two different looks? This is a top that has such weak trigger lines with double divergence pivot stop out. It's like guaranteed money short almost. This one is too strong into it to think guaranteed money long. It's enough reason to stop taking short trades until it breaks, but probably going to break. So here, I've got another one of these pictures. Look at this pivot stop out up here of the divergence line. Look at where the triggers are in relationship to that little pivot stop out. What do you guys think about that? I mean, that's pretty much go short, right? If your small charts support it. Would you guys agree with that? This is a gold chart. And then look, you have a pivot stop out. And yes, the triggers are barreling down, but if you tried to go short above it, you still lost. What it did is it made it go back up to resistance. And here it is again. If again, you get back above these things, look, eventually it goes down, but it goes down from resistance. And then the strong triggers are pushing down, and then eventually, this is really what we're waiting for right here. We're waiting for everything to break, everything to be going down, nothing to be in the way, and then that's the easy money that we make. Can you guys see the difference? And again, look, if you try to do trend trade shorts because the lines were going down strong above here, you probably lost. And that's the reason why. It just, not saying you can't do short trades from up here or up here, but immediately above those divergence lines, I mean, you're just asking for trouble. Same thing on crude right now. It may go up eventually, but if you try to go long right there, just below that divergence line, you're just asking for trouble. Can it go up eventually? Sure it can. Do you guys understand the concept? And this is where most people fail with their trading is they don't spend enough time. They're looking so hard for a trend trade that you should look. An easy trend trade with nothing in the way is super simple. This is where you guys have to focus your time. Right? And there's 12 looks that ruin a trend trade. And there's one look that makes it easy. So what does that mean? You're sitting there waiting for the one look. Right? And John K., you hate to sit there and do nothing. Jerry, you hate to sit and do nothing. Everybody hates to sit and do nothing. But this is, especially when you grew up in the corporate world, the more you did, the harder you work, the more you make. And the opposite is true here. You only need to make 20 or 30, 40 ticks a day. And if you wait for the super high probability trades that don't have these things against it, you usually end up winning. So look, if we break above here, then sure, we'll get some easy long trades. And, just guessing, we'll go up to resistance. So look, here's your crude. Again, look, we talked about the long trade over there, but this is the spot where you would have tried to go long because you said, hey, it's the last spot, and I'm going long, and then look, here's the outcome. Not so good. Now, It's been said that if you have a reason to not go long, you can go short, right? I'm not teaching like Don Green, you said, because, you see both sides of the coin. The answer is yes. If you have one of these things that's against your long trade, this is where counter trend traders typically look for their counter trend trades. The problem is most of you guys in your first year of having the software aren't going to be, there's going to be a couple that are so obvious that you'll be able to do it. But the problem is in your first year, you're desperately working to avoid these things in the beginning, and you're not really looking to use them to go the other way. Yes, that's probably true, Greg. Does anybody see a high probability trade? I mean, we're not going long. We've already discussed that, right? It's not my job to tell you what it is, Greg. I've already told you what it is. It's not a long. We've already said from up here. Oh, sorry, I had backed up. Greg, I thought you were talking. Sorry, my bad. Mike, you're short. John R., you have serious trouble waiting. Yeah, most newer traders do. They have trouble waiting because, they think they should be doing something because the market's moving. And again, we're kind of in a mess here on crude oil. But, that's the whole bank robber analogy. You can't walk into the bank and say, "Give me all the money." You'll be a bank robber. They may shoot you or arrest you. You have to walk into the bank and say, "What is my account and what's my money in my account? And may I please have my money out of my account?" And then you're just a client. And you know what? They will probably give you your money. It's the same with trading. You have to know what's your money and what's not your money. And that's what this whole exercise is about. Janesh, you went short crude oil? That does not surprise me. At 21? Pivot stop out? All right. So what you're saying is that right here, because you knew we weren't going long, you said, "I'll go short counter trend trade." I already know why you're doing it. It's cool, but again, we're not teaching counter trend trades right now. We're just talking about trend trades. Yeah, the 14.2 had fibs. You're right. So again, guys, the whole point of trading is doing what? Figuring out what can you get away with, what can't you get away with, when should you be taking trend trades, when does it become lower probability? And look, I wrote the software and I wrote the rules, and even in the live environment, sometimes I'll miss something. I'll be like, "Oh man, I should have done one more," or "Oops, I should have stopped." Right? So you guys have an uphill battle that you have to work your way through, which is just going to take time. Can you do a trend trade short? Well, not after you have divergences at fibs. Well, can you do a trend trade short if you have double divergence pivot stop outs at the high to get back to support? Maybe you can't. Did anybody take a trend trade short on gold? $12.89. Okay. Now, obviously, when we look at our charts, look, we're running into some trouble spots over here, aren't we? Are we going to get through them? I don't know. If we bounce up off of this area with divergence, then maybe no more short trades. Preferably, I'd like to go retest the lows. Just talking big picture here. Preferably, what I would like to see is, again, this was back to our original thought, which was hopefully a trend trade short to get us back to the lows with divergence so we could have a pivot stop out with divergence so we can have a true low. Either way, whether the market turns from here or the market turns from here, if the triggers roll back up, we should be able to do trend trade longs. Vance, you went short at 1288.70. Okay. And again, look, the ideal first spot would be to get to this first blue fib. Ideally, all the way back down to the lows. We'll see what happens. I mean, I would love nothing more than to retest the lows and stop everybody out at the lows with divergence, because that would set a really, really, really solid bottom if it happens. But if the triggers roll up, look, here's what I'm looking for. It's very simple, guys. You don't have to guess. You don't have to be very smart. You don't have to do anything. Wait for the market to hit some areas and not break them, and then the triggers will roll back up. You don't really have to be very smart for that, do you? I don't know whether it's going to be the first area or the last area, but hit an area that the triggers don't break, and then the 14.2 triggers roll back up, and we can start doing trend trade longs. What do you think? You don't really have to be too smart for that one. You just have to be patient. And sometimes it takes a couple hours for it to materialize. So, whether it's this spot or this spot, if and when and after the triggers roll up, we can do long trades. That should be pretty high probability. Does that make sense? So, it could take 10 minutes, it could take 4 hours, it could take 8 hours. I don't know how long it's going to take. Preferably, I would like to see it go all the way to the bottom. But because we came off of multiple fibs and the triggers went up so hard, and if we put in divergence and fibs and triggers and they roll up, then we have to respect it. Does that make sense? Imran, you're short. Obviously looking for some of the lower levels here still. But this is a nice collective look at all your charts. So you got a 21.3 coming off of the mid band. You've got your 14.2 that's going down. You've got your trend trade rules on your 5.1. And then you have your entry areas on your range bar charts. That's a good look. Mike H. All right. Looks like you went short, got stopped out at the high, and had to get back in again. This goes to the management side of things. Number one, you probably got in at the wrong spot a little early. And then number two, the rules state, and as you guys watched the video 5,000 times, pivot. Newt, you can attest to this, right? Behind the 5-1 reversal bar. And not until the reversal bar actually happens, then you can put your stop behind it, and then you don't get bumped out. That's a hard lesson to learn. Number one, getting in too early, Mike, which is you like to jump in early, and then you get bumped out. But if you got in at the spot and you had a 10-tick stop, that would have never happened. You got your hand caught in the cookie jar trying to go early. But do you guys see how slow this is? This 14-2 chart is going to take quite some time before it turns into a good trade for us. Some people did a little short trade right here, which is cool, right? But before we can do any long trade, let's just say, do you see how much time it's going to be, whether we stop here, we stop down here, and then we have to wait for it to go up, and then we have to wait for the triggers to roll, and then we can do a long trade. So we're like an hour or two away from doing a long trade here. Maybe even a pivot stop out another short, but we're starting to get lower probability. Why is it going to be lower probability? Because you guys know the rules, right? The rules state that, the rules state that if you touch or price touches, where is it? Price touches synthetic triggers from the wrong side. So let's look at the picture and see if you guys understand it. So if you're going short and you get to your synthetic triggers, now these are obviously really against you because they're crossed up. But would you guys agree that price is touching synthetic triggers from the wrong side, meaning bouncing off of them to the upside? So look, one trend trade short, sure. But this, I guess if I could put numbers on it. Right, so 2I is what it is in the rules. Price touches synthetic triggers from the wrong side. And J, that's also another one. So this is an example of the market going up, but touching triggers that are going down. I mean, obviously, if they're crossed in the same direction, that's really helpful. These are in the opposite direction. So, again, this is a 50-50 trend killer. If they were crossed up, the synthetic triggers, it would be an absolute trend killer. Because they're crossed down, maybe 50-50. If we start making up bars, then for sure not. So, you have divergence on this chart, which means what? What can we almost know for sure with divergence on the small chart? That is going to, at a bare bones minimum, stop out the last pivot, usually. Stab back forming on 14.2. John K., tell me what you see. Are you telling me that we should be going short into a blue line? Is that what you're trying to tell me? I'm trying to get what you're trying to say. Because when you say stab back forming, since the triggers are going down, you're thinking about going short into support. Is that what you're telling me? Well, what about the synthetic triggers? They're above. So the small triggers are below. I'll give you that. So listen here. Just listen to what I'm going to say. How easy is it going to be if this line turns red and the market's way down here for you to do an easy short trade that you don't have to guess? Wouldn't that be better? So it'll look something like this over here to the left. Triggers going down is fine, but sometimes they go a little bit past and then they turn back up. You got to have the color change to red. You know, look, if both the synthetic triggers and the small triggers were below here, that'd be a different trigger line read, wouldn't it? If you guys take the time to watch this video that I'll have made for you guys, I'll post it in again, save it. Reading the fibs and trigger lines is like the most important thing you can do, because then you'll know what's going to happen. Right? So a lot of times, John, this is where they get the suckers. Check it out. They'll run a small trigger a little past their red line and get all the suckers going long at resistance, and then once they get back below resistance, then resistance actually works. We used to call it the sucker close, but we stopped. Somebody frowned on that, so we quit calling it the sucker close. It's been 20 years, but if you've been around for 15 of them, you've heard that before. That's the sucker close. Yeah, and this chart is explained in graphic detail in the video, fibs and trigger line reading. But it's really simple. It's where your triggers when you reach fibs. If they're really strong into it, they break. If they're holding at it, the fib holds. If it gets above it, you wait. If it gets back below it, you use it. It's really simple. So take the time and rewatch this Fibonacci and trigger line reading video. I think it'll do you some good. So right now, Fibonacci and trigger line reading says you have blue support, right? If I was to use that picture, John, what do you think? Blue support with the trigger past it, so wait until you figure out what it says it's really going to do. Because it doesn't know. So when it doesn't know, you end up, this is where everybody loses their money in chop. It'll be painfully obvious when you have an easy trade. Painfully obvious. Wait is a 4-letter word. Speaking of wait, I'm going to go get a drink and I'll be back in a minute here. So if you guys have questions or charts or anything, put them in. I'll be back and take a 5-minute break here real quick. I just want to go back and look at this again. Because I know, Janesh, you said you did a short, but again, excuse me, you can see how we have trouble here, right? This is not the easiest short on the planet. When you have support, even though the small triggers are a little below it, it just causes trouble. So again, this is what it ends up looking like on your little chart. And again, crude hasn't been that, adventuresome today, but again, you can see, yes, it went down some, but you can see where it died at support and divergence. And again, we're either going to have to have a strong breakout to the downside, or support's going to hold and just take us back up into, resistance, of which we're not going long into that anyway. So, again, just not a whole lot of action inside of crude oil today. And you can see, this is one of those little things that just, it's just, you have to just know it. Obviously, this is our resistance up here. You can see it, but if we break this support and the support turns red and everything's going down, then short trades are going to be easy. And until then, they're just not going to be easy. So, again, going back to gold. For those of you guys who had a short trade, to get back to this spot, that's cool. So, look, we're going to make some decisions here in gold pretty soon. Maybe we hold support. Maybe we go down and retest the lows. My personal preference, as I told you guys, is go down and retest the lows. If you can get a double bottom at support with divergence and the triggers roll up, you've got a good bottom. So, look, if it rolls from here and the triggers roll up, we'll have a good bottom and we'll go back up to resistance. So now that we've hit support and we've done it from the wrong side, shorts are lower probability. How's that? Does that make sense? Short trades from this point forward are lower probability because we've hit support and we've retested the synthetic triggers from the wrong side. Do you guys understand that? I'm not saying it won't go down. It could, but if it bounces up to here, the short trade is going to be a lower probability. You guys understand that? All right. Sorry, I got a little something in my throat. Puberty kicked in. All right. So, what do you guys see here? Just throw it out there if you see it. A couple of divergences at support with a pivot stop out. That in and of itself is enough to make, trend trade shorts a little bit lower probability. And again, not saying you won't get one, but it's just lower probability. All right, very good. And look, I've recorded this so you guys can go back and watch it. I think it's important. It's easy to see trend trades that have perfect everything. And, there was one that I did. There was one that I did the other day, which was this trend trade. Hang on a second. Let me find the full look of it here. This is the look of a high probability trend trade. Again, it's the super strong triggers, the edges of fibs. And again, it's not that, you're going to be faced with some trouble sometimes, and again, you have to decide, is it worth my hard-earned money to go short after we hit support with double divergence, pivot stop outs on my little chart, divergence potential on my big chart? Probably just not worth it. Will it go down? It could still go down, sure. So again, you guys have to decide for yourselves what's the most important thing to you. Keeping busy or making money? And, again, that's why I made this one slide the other day, which was with all the movement that you'll see. And look, some days get a little choppy, so you don't, and that's why it's kind of nice to have gold and crude oil, so you can have two. But to have everything going your way and everything going your way and nothing in the way, all you need is 25 ticks on a 4 lot to make $250,000 a year. Would you guys, if you went to a job interview and they said, look, we're going to pay you $250,000 a year and you only have to work 15 minutes a day, would you take that job? That's pretty much rhetorical, because anybody that says no, we don't want to mess around with. I mean, it's a rhetorical question, obviously. So, and again, you can turn that $250,000 a year job into $1 million a year job by trading 8 lots and making 25 ticks a day. Make it a $500,000 a year job, or trade, 20 lots and make $1 million a year. The problem for most traders is they do too many trades, and they don't really, really, really wait until one of the guys, long, long ago, Larry Williams, you guys, if you read books, you probably have read, but, he won a trading contest a long time ago. And he said, they said, how did you turn just a little bit of money into a lot of money? He said, I just sat there and waited until the money was on the floor, and then I picked it up. And if you really think about that concept, that's really what we're doing. We're just waiting until the money's laying there on the floor and we go pick it up. So, in actuality, would you rather try to make that 25 ticks on a bunch of trades or just one or two perfect trades? And once you get that mindset that you don't have to be busy all day long, it just really becomes a lot easier. You just, like right now, you wait for the triggers to roll up and you wait for the divergence from a fib to be true, and then you take your one good trend trade and make 20 25 ticks. Tim, there is no way to set up an alert on a potential divergence because that's the whole point of it. The whole indicator is called divergence potential. It's not called divergence actual. So the idea behind divergence potential is for you to be able to see at an area such as blue Fibonacci support and synthetic triggers, the potential for divergence, So you know that it's no longer okay to do trades later. You understand what I'm saying? So I literally named the indicator divergence potential because it could be potential all the way down to here. So it's more important to understand where you're at, where you're coming from, and what's happening with your fibs and trigger lines, which, again, I'll go in and reiterate. You guys really, really, really should go in and watch that fib and trigger line video. Where the heck is it? Because when you get the right fibs and you get the right, let me find that darn thing. When you get the right fibs and you get the right trigger line look and you get the right everything and you have divergence potential, it means a lot more. All right, Imran, see what you got. short, short to support, long off of support, and then short trend trade, and then long pivot stop out at fibs. That's just about technically perfect. What do you guys think? I mean, that's almost everything we talked about all day long. Shorts going down, breaking support, one more trend trade short, down to support, no more trend trades because of support, and then a long trade with double divergence, and then one trend trade short, and then one counter trend trade long. John K., it doesn't matter what anybody else does, bud. It only matters what you do. So his log sheet, your log sheet's the only sheet that matters. So, again, this is where, guys, the room is designed so you can post in pictures and ask questions. So you can learn the concepts. I mean, look, the concepts are the concepts. I mean, here's the page, here's the videos with all the concepts and all the rules, and then here's the rules written out with examples of what you should and shouldn't be doing. That's all done. So there's literally, other than me helping you guys understand these concepts, there's literally nothing else for me to do except, have you guys actually talk about what you've done and why you did it and, make sure that you're following the rules. All right, guys. So, questions, comments, concerns, things you guys want to go through? Again, I want you guys to think about the simplicity of this whole thing. At some point on gold, right, it's going to look like this. Whenever it happens, wherever it happens, at some point, whether it's the first fib or the last fibs, gold is going to hold support and then the trigger lines are going to roll up. Tim, I already answered your question. Did you not hear it? Okay. The answer is no, there is no alert for potential divergence. Because you don't want to know where there's a potential divergence all the time anyway. The only time you want to see a divergence is when you're at a spot that it might make a difference. So think about this. If you were, let's just say, divergence at support, that means something. It means more, doesn't it? Or if you had double divergence at the edge of Fibonacci resistance, that might mean a little more to you, don't you think? So it's not just the potential for divergence, it's where is the divergence happening from and where are the fibs and where are the trigger lines in relationship to where that's happening. So like right now, we have potential for divergence on gold, but it could literally be true all the way until we get down to here. Potential for divergence isn't a guarantee it's going to turn. It's a guarantee that you should stop doing short trades. That's so, again, let's not mistake the whole potential for divergence versus actual divergence. Then, again, from every video on the planet that you've seen on trend trades, look, when there's no divergence, you usually go up and then you usually make a run back down again, and then they make up their mind. In order for the downtrend to continue or for short trades to be good, we would have to break through all of this support, which they could do. So, this below this green box is when short trades will become easy again. Until then, we're waiting to see if the market agrees with the fibs and the triggers roll up, and then we'll do a long trade. Which, it's very slow. We're probably going to get to lunch before anything really happens here. And again, just like this crude, unfortunately, it's not the best trading day in here for, I guess it's a good day for lessons on having things that are in your way. John K., do you see what I was talking about when you said, hey, there's a stab back for a short happening here? It's iffy between this area and this area right here. A good solid breakout in one of those areas, and then we'll have a lot more fun with it, which, may happen this afternoon. It may happen tomorrow. Who knows? And then Tim, again, going back to what you were talking about, the potential for divergence at the edge of resistance is a lot more powerful than, divergence out in the middle of nowhere. It gives people the ability, if they choose to, go counter trend trade there, to be short from 71.20, give or take. Did anybody go short crude oil up there? I'm just curious. I know it's kind of getting late in the morning. It's 11:45 already, so. So look, here's the things you guys need to go study. Number one, watch this fib and trigger line reading video. It's a great video. It's really, really, really going to help you out. Number two, really spend some time with these pictures in here. The looks that hurt trend trades. Don't worry about counter trend trading for now, Don. I know it's exciting to go sell the top. Like right now, you're short, you're doing a counter trend trade. It's more important for you to, and again, look, some people are geared for counter trend trades right off the bat or not, but perfect trend trades will pay the bills. Okay? If you're already making live money, real money, not pretend simulator money, but real money, doing perfect trend trades, and then you want to add on counter trend trades, I'm cool with it. Because you've spent enough time to know these things so well, like the back of your hand, you know when the market's going to reverse. You've got that feel. You know what I mean? You've spent thousands of hours looking at the darn thing and you just know. You can apply the rules instantly. You say, oh, look, I know the rules and I know we're going the other way. I can go short. I know what my risk is. And if you're not yet, that's just good rule of thumb. If you're not making a bunch of money on trend trades, usually best to leave the counter trend trades alone until you start. So just, just generalized information over the years of experience that I've seen that makes things a lot easier for people. And again, look, you guys are big boys and big girls. It's your money. I can't tell you what to do. The lawyers say something like this, right? I'm not trying to give you advice. I'm not trying to tell you what to do. I don't care what market you trade. I don't care what broker you trade through. In the end, my job is to make pretty lines on the chart, teach you guys the rules, teach you how to read the software, and then the rest is up to you. Now, I don't disagree with your short trade up here, Don. It's, how far it's going to go, I don't know. We'll see. So I don't disagree with it. I just want to say that. I prefer new users until they're making a bunch of money to do trades with the trend, but I do understand the allure of going against the trend. And if you're going to fight the trend, double divergence at the edge of Fibonacci resistance, who am I to argue that? Right? I'm not the one to argue it. Whew, man, it's slow. Gold has lost its luster, and crude oil is stuck in between two areas. So we may be done with the day. All right, so I'll open it up for questions. Questions, comments, concerns, things that you guys would like to go through, please let me know. If not, we'll probably end up winding it up here pretty soon. So just let me know if you guys have questions. If not, I did record this. I will post it to the YouTube so you guys can watch it later.